stopping by. Do another video here. This is part of the free version of Trading Quotes, my third book. I just published my fourth book, The Trading Journal. It's available now on Amazon Kindle, hardcover and paperback. I'm really proud of it. You can take a look at that. We're waiting for some more reviews to come in. And in the meantime, what I wanted to do is make the third book. As you know, I published 4. And Trading Quotes is my third book, so I'm doing a free version here on my YouTube channel at Ched's Trading. And here we are. I've already done weeks 1, 2, 3, and 4. So why don't we get right into it? Just as a reminder, of course, check out Bitcoin Live, where I do a twice-a-week full market report. Check out all the great stuff I have available for you here in my YouTube. And the new book, The Trading Journal, is out. But let's get right into it. We're going to do Trading Quotes Week 5 and Week 6. So Week 5, Monday. Small losses are like calluses on your hand and feet that heal and make you durable. Big losses cut deepest and do not always heal. So manage your risk carefully. It's a great point. These little losses that you take, little losses are fine because you can get like a lesson from it, right? A big loss, oof. You may or may not recover from it, but a small loss is something you can recover from, you learn from, and it makes you tougher, it makes you stronger. And it's kind of the same concept of having these little cuts. You heal from them, it makes you tougher, but you want to avoid those big losses, those big cuts, because they do not always heal, all right? Tuesday, any trade that makes you feel uncomfortable should be closed immediately. And this has a lot to do with mindfulness. And if you, as you know, in the new book, The Trading Journal, I talk a lot about emotional mindfulness, and I have a chapter on managing your emotions. And when you're entering a trade, when you're exiting a trade, you want to be aware of how you're feeling. Am I excited? Am I scared? If you enter a trade and you immediately feel uncomfortable, there's a reason why. Like, you probably have too much money in the play, or you don't have a good plan, you haven't thought it out, you're not ready to handle volatility. So if you're in a situation where you have a trade that makes you feel uncomfortable, you should close that trade immediately and then come back with a good plan and with confidence and be ready to manage that position. Wednesday, bulls get extra bullish after a big move up, and bears get extra bearish after a big move down. Observe and trade accordingly. The pendulum of sentiment, and even within like a small consolidation channel, everyone can be scared, everyone can be frustrated, and then you get 2, 3, 4 green candles. All of a sudden, big move up, everyone's bullish. Well, maybe that's just a correction in a downtrend, or vice versa in a strong uptrend where you've had just like a shock dip, all of a sudden everyone's bearish. So you want to pay attention to these pendulum swings of sentiment, and bulls get bullish after a big move up. So it's one of those things where, sometimes you might start thinking about taking profit when bulls are celebrating or when bears are celebrating. Like, bears will celebrate after some damage has been done. So pay attention to that. You can get a lot of good information from this. Thursday, the best moves come after everyone has been liquidated. You see this all the time where you have what we refer to in crypto as a Darth Maul candle. We have the small body and the big upper and lower shadow. And, what happens is all the open interest has been reset. Everybody gets stopped out. And then usually you get big moves after that volatility, after that kind of that chopping around price action. So you tend to see really strong moves after everyone gets liquidated. It's a very interesting concept. I think it's a very real truism here. You really do see this play out if you trade in markets long enough. Friday. This is week 5 and Friday. Unless you want to be someone else's exit liquidity, stop chasing pumps. Either buy the dip or wait for a confirmed breakout. So, it's a concept to talk a lot about on my YouTube streams. I'm doing that 3 days a week on YouTube, Ched's Trading. And you want to avoid kind of chopping around in the middle of the channel. You want to wait for what's called price interaction with a key level at support or a breakout. And so You don't want someone else's exit liquidity. What does this mean? Well, somebody else who's trading in a well-defined range, they bought support, and now they're taking profit as the price reaches resistance, like in some bull rectangle or something. And so stop chasing pumps. Be more patient and be ready for the dip. Buy the dip at support, but don't buy into the rush in the middle of the channel. Either get a breakout or wait for a dip, right? Stop chasing pumps. Saturday. This is a big one for me. There is no such thing as being stuck in a trade. You are simply choosing to remain with a failed idea. I hear this all the time. I am stuck in this play. I thought this was going to happen, but it didn't, and now I'm stuck. You're not stuck. You always have a choice to sell, to buy, or do nothing. That's a choice. You're in control. And if you're choosing to keep holding, you're choosing to keep choosing to stay in a play that's already failed, you're not stuck. You're simply choosing to remain with a failed idea. You're saying, well, my idea failed, but I'm still just going to hold on to it. Why? You don't have a plan. You're not following a plan. You're not stuck. You've made a choice. This is really important. Don't disempower yourself and say, I'm stuck. No, you're not stuck. You're choosing to stay with that bad idea. Sunday, if you quit now, you'll never know how close you came to quitting before you made it. And this is kind of an interesting one. It's one of those things where any kind of task that's really hard along the way, there's so many times where you want to quit. And if you quit now, you'll never know. Once you make it, you'll remember, wow, there were so many times I almost quit along the way before I made it. So if you quit now, you'll never know how close you actually came to quitting before you actually made it. It's a little bit counterintuitive, but this one for fun is meaning, resist the urge to quit, resist the urge to give up, dig down, take those lessons, use them for your journey. And when you do make it, you'll say, wow, I almost quit. I almost quit a couple times there. So week 6, again, this is part of the free version of my book, Trading Quotes. This is my 3rd published book. Really great project. I'm super proud of it. This came out in December 2022. I now have the Trading Journal out. I love this book. Why you should use a trading journal, how to fill one out, emotional mindfulness, good trader habits. It's Trading Wisdom Part 2. Waiting for more reviews to come in. It's a wonderful, wonderful book project. So we're making book 3 free. This is Trading Quotes. So let's continue on with week 6. Week 6, Monday. The best human trait for trading is patience, and the worst is stubbornness. Be mindful. Well, you can't be mindful if you're not even thinking about or even attempting to observe your emotions, your feelings as you trade. So patience is critical, right? Because much of what we do is waiting for a good setup, not forcing it, right? Waiting for price interaction with the key level, waiting for a breakout, confirming it, whatever way we're confirming. Daily close, 4-hour close, whatever method we're using, we're patient, we're waiting for our opportunities to come to us. That's a great trait. Patience is so important. Stubbornness, that's a problem, right? It's one of those things where you want to have, and I have other quotes about this, of course, you want to have strong opinions loosely held. You're willing to adapt to new information. You have to adapt to new information. This price level is always held. It's always support. If it breaks, you got to pay attention. You got to rethink your view of how you're reading the trend. Rethink your estimation of the strength of that trend, right? If that well-defined support level fails. So stubbornness is not a good trait. And that's different than resilience. It's not stubbornness in terms of not quitting. You're resilient. You keep going. But stubbornness is bad in the sense that you stick to a failed plan, that you don't adapt to new information. So you must be mindful. Think about your emotions as you're trading, folks. Tuesday, if you loved these plays 5 minutes ago, you should adore them after a 10 to 20% haircut. Stop chasing the green and learn to love the red. This is funny. This is a tweet I originally put out, I think, on like Valentine's Day 2021 or I don't remember exactly when it was, but the idea was people loved altcoins at that moment. They were doing really well. And then you had like one day of red and everyone's like, freaking out. But you actually should embrace that, right? Trends need to pause and digest to continue. You need to reset that short-term supply demand dynamic, wash out some of those, short-term traders, and that allows for a greater move higher. So again, if you're wanting to go long, you're waiting for a dip in an uptrend. So you should be embracing the red. Learn to love the red in an uptrend, right? Rather than chasing the green. Wednesday, bull markets hide your bad trading habits. Bear markets illuminate and amplify those bad trading habits, forcing you to either fix those errors or tap out. Know what kind of market you are dealing with and set your expectations accordingly. So be aware if everything's going up, if everything's great and everyone's posting screenshots and you think you can play anything, maybe it is that type of market. They don't last that long, but if it's a bull market, you look like a genius. That's great. But be aware that, am I just doing well because everything's going up? When it's a bear market, when it's a choppier market, your bad habits will be exposed, right? Those tougher markets will illuminate and amplify your bad habits. It will bring them into the forefront and it will make them, they'll be even more costly. So really be aware and be careful of, especially in a tough market, don't just be playing anything. Be careful, be mindful, think about what kind of market you're in and adjust your expectations accordingly. Thursday. Oh, I love this one. If you cut your watch list in half, you'll be surprised how much better your trades perform. So, what is the right number of plays to have in a watch list? I think you'll need to decide that, but I think 15 is good. It's a loose number, but the idea is you want to be playing things, trading charts that you know well, that you have muscle memory on, that you've been studying, you've been following, and you understand those trends. You can tell when they're strengthening, when they're weakening. And so you don't want to be bouncing around. And you don't want to have too big a watch list. With too big a watch list, you don't really have a feel for anything. So, honestly, cut the watch list in half and focus on those remaining plays. Study those, and ideally the strongest stuff. Cut off the weaker ones. Don't be trying to play bottoms. Don't be trying to play reversal charts. Find the strongest charts. Wait for them to dip. Wait for them to drop to, well-defined levels, and then execute, right? So cut your watch list in half, and you'll be surprised how much better your trades will perform. Friday. The beautiful thing about crypto is that if you miss the ideal entry, you can just play something else. There's always something going on 24 days a week, 24 hours a day, 7 days a week. This is a fact that I remind myself when I'm feeling the urge to chase. Crypto is a wonderful market for many reasons. The fact that it's always trading, there's always another opportunity. You should not feel FOMO. You should not be frustrated if you missed what seemed like the perfect entry. There's going to be something else. It's always a market. There's always something going on. Doesn't mean there's always opportunity, but there is an opportunity for there to be an opportunity because it's a 24/7 market. So when I'm feeling like I want to chase, I say, you know what? I'm going to wait for the next good opportunity. I'm just going to wait. I'm going to stay disciplined. And that way I'm going to protect my capital. Saturday, week 6, Saturday. You should never attempt to anticipate a reversal. Instead, wait for one to form and then act with the comfort of trading with the new trend. So it's one of those things where like people don't want to sell downtrends, right? People don't want to sell downtrends. Like, what if I miss the bottom? Well, for the bottom to happen, the price, first of all, has to break that like downtrend line or descending supply trend. And then more importantly, it has to recapture some lost support level. So rather than anticipating, this could be a bottom because there's one green candle, wait for it to actually do something and recapture lost support. That's a much better suggestion of weakening bear trend, and red light turned orange, turning green, right? The trend turning back around. So don't anticipate a bottom. Just be ready and know how to mark one out. Watch the chart, mark up the key levels, wait for the momentum, and then ride that momentum. Trading so hard, make it easier on yourself by riding a trend, rather than anticipating how one, when one might turn around. And week 6 on Sunday, if your execution is off, it doesn't matter how brilliant the idea is. You can come up with a really great plan. I'm gonna buy in the neckline break, and I'm gonna take profit here. But if something happens where you're sloppy with your execution, you go too fast, you enter the wrong number of shares or coins, you go too early, or you ignore your confirmation, or you ignore your invalidation, it doesn't matter. You had a good idea, but you have to execute the idea. You have to follow through with discipline. So you can intellectualize a good trading plan, but if your execution is off, you've got nothing, right? It doesn't matter how good that idea was. So that's Sunday. That's week 6. We'll do 7 and 8 next time. I'm going to do this entire book, my third book, the Trading Quotes book. Now that I have a new book out, I'm making the third book for free. There's already a free version of my cancer memoir. There's already a free version of my trading wisdom book. All my books, of course, are available on Amazon, Kindle hardcover, and paperback. I'm working on my next book. Always looking forward. My next book is a poker player's guide to trading. That should be out in the next couple of years. But of course, Big Chad's on Twitter, and it's part of the Trading Quotes playlist on YouTube. If you haven't yet done it, watch my masterclass tutorial. It's going to help you out a lot. Of course, I am a founding analyst at Bitcoin Live, where I do a twice-a-week full market report, in-depth crypto analysis with the best team in the world that studies crypto. So consider checking that out. This is part of the Trading Quotes playlist. So thank you for hanging out here with me. I'm going to keep doing these. I'll eventually get it all done. Give me time, folks, but I'll get it done for you. And a warm thank you for being here. All right? I will talk to you soon. Big Chad's out. Peace out, everybody. Thank you.